what's going on, guys? This is Brandon, your trusted realtor, and I'm coming to you with another great episode. Now, if I told you that America had a dirty little secret, would you tell me to shut up? Well, if I did, you wouldn't know the secret. So, the mortgage industry has a very long and checkered history. And here in America, it has not only been a tremendous help and success to creating wealth, but it's also been a point or a tool of division amongst people of color, both whites and non-whites. Here in America, we previously had a policy of discrimination called redlining, and lenders used this policy to deny housing and financing to millions of people of color, specifically Black and brown people. But not only that, these policies created such a division and stalling in the creation of generational wealth that many analysts have and studies have been done as it relates to the long-term impact of redlining, and have found that this policy alone that was established by lenders is responsible for the creation of poverty amongst many minority communities, especially urban areas, the creation of the modern day ghettos as we know them. And these policies actually, in the most recent study that was done, now there's a study that was done by a New York firm, a 104-page study. I'm on page about 60 or so, completing as far as reviewing it. But the document talks about how over the last 20 years, the policies that were imposed by lending institutions resulted in $16 trillion shaved off of the GDP. That is the gross domestic product. GDP is the total value of goods and services produced in a country. So over that 20-year period, that is essentially saying that our economy has missed out, left on the table $16 trillion because of policies related to redlining and denying people access to mortgage and mortgage policies based on the color of their skin. One of the reasons that this underscores the power of ownership is that there were policies created that were uniquely used to create divisions, economic divisions, and wealth gap amongst people. Also to create divisions within communities to keep individuals based off their skin color from having access to other communities or to predominantly white communities. Actually, in fact, home ownership rates for Black families is actually at a historic low. In the first quarter of 2020, 44% of families owned their home compared to 73.7% of white families, as confirmed by the Census Bureau and data that was received from there. The home ownership gap between Black and white Americans has widened since the Great Recession. Meanwhile, the home ownership rates for whites, Asians, and Latinos continues to grow. The biases in the industry exist, and one of the things that you'll often find, especially as a data analyst and data scientist, is that you find implicit biases in everything, whether it's research, whether it's people's perspective on how data is interpreted, how they interpret data, life experiences. All of these biases are typically unconscious. And one of the things that research shows is that implicit biases have a very significant factor on how mortgage professionals and real estate professionals evaluate minority communities. So essentially, what am I saying? More individuals who are minority or who are Black real estate agents and lenders and loan officers and appraisers are needed to be in the community. One really great example that I'll paint for you is being a real estate agent licensed in DC and living in a predominantly Black community in DC. I live in Capitol View, DC. And as it relates to that area, Ward 7, there's the evaluation of properties is different because of the amount of renovation that is happening and the scope of properties. And quite often you find that either real estate agents coming into this area from either some part of Virginia or in Cheverly and they don't have the experience walking through these homes and understanding the differences, not only just generically in square footage, but what really impacts these values. Also, the implicit bias that in most geographic neighborhoods, if any of you guys in DC have been paying attention to home prices, values, and the availability of homes, you realize that Southeast DC is a hot spot. It all pretty much began in Anacostia about 8 or 9 years ago, where people began to flood that community. And I think if we're being transparent here, lots of white people began to move into Anacostia because the area began to renovate. There was busboys and poets. It became a more attractive area to live because the reality, and I think that was kind of the initial onset of the realization, is that it becomes very expensive to live in DC proper or DC Central. And so that median income, as that began to tick up, there's a natural progression or wave of individuals, not only who lived in DC proper, east or west of the river, that wanted to have homes and home ownership, but individuals that lived further out in further deeper parts of Maryland and Virginia, folks that lived out in Beltsville or in Cloud, Maryland, but also worked in DC, realized that they wanted to have that closer proximity and they were willing to buy a home, do the renovations, and fix it up. Well, that's had a trickle-down effect on all of the properties, or most of the properties west of the river. So it is east of the river. So it's behoove you to understand how that relationship and that history interacts with price values. Now, underscore that reality with the historic and the statistical reality that predominantly Black communities or minority communities, those homes are typically undervalued anywhere from between 20 and 35%. Now, you'll say that's based on what statistic? I'll readily admit that's based on my own anecdotal information, my own reading of data and statistics, and I previously started a master's analysis on the mortgage environment and looking at blighted properties and communities. So that's based on the research that I've done, and I've amalgamated myself personally. So I can concede if anyone else has an article or something they have as far as more information you rely on, but this is, I'm glad to go toe to toe as it relates to that information. So what does all of this mean? What does redlining mean? Is that still a policy that's happening today? Now, redlining in fact is an illegal policy and an illegal practice. In one of my earlier videos, I talked about fair housing, and fair housing really underscores some of the protections that you need to be aware of, and it protects you against certain activities such as redlining. Remember, I always say that you, as the person involved in this real estate transaction, you're the most important person. You're the most important piece of this engagement. So it's important that the little black boxes that occur in the background where people are doing work and doing analysis, and you don't feel like people are making backdoor deals and you are getting the short end of the stick as someone who is a client and as a customer. So it's always important, I think, that even though the real estate transaction of itself is vast and requires a lot of pieces of it, that's why I encourage everyone to begin a plan now and to begin to collect this information, because it doesn't make sense to try to decide in June that you want to buy a house, and then in July you're in a house and you've not even begun to digest all the information you need to know as it relates to being a homeowner and some of the historic information that's going to protect you against discrimination. Now, as we move forward, lenders in the ecosystem, especially with the transition of this new wave of sentiment of Afrocentric awareness, Black Lives Matter, larger corporate lending institutions like JP Morgan Chase have pledged billions of dollars in the wake of, or in directions of assisting with reversing the impact of those redlining policies. For example, JP Morgan Chase, they will make available $14 billion in loans and investments to 100,000 affordable rental units. They'll commit $12 billion in mortgages. They'll originate 40,000 home purchase loans for Black and Latino households. They'll help an additional 20,000 Black and Latino customers lower their monthly mortgage payment through refinancing, and they'll provide grants for down payment and closing costs for individuals that need that. Citigroup, which is another bank and big player in the industry, one of the top 5 banks, they pledged over $1 billion. So they pledged to spend $1 billion over the next 3 years in order to help close the racial wealth gap. More than half of the funds that they've pledged will go towards supporting home ownership for people of color and affordable housing by minority developers. Bank of America, who's also a big player in the Big Five as it relates to banks in America, they are directing $300 million to 4 areas. The first is $200 million to minority entrepreneurs, $50 million to minority depository institutions or to banks, $25 million in support of community outreach initiatives, and then $25 million in support of job initiatives. So these initiatives will be made over a 4-year period via direct equity investments in Black and Hispanic-owned businesses, while investing in programs to produce future entrepreneurs. Additionally, Wells Fargo has jumped in and put their name in the hat, and they're gonna make a financial commitment through an initiative they're creating called Expanding Black Business Credit. The funds here will provide $10 million in seed money towards funding a Black Vision Fund, and the purpose of the Vision Fund will be to provide loans and grants to help revitalize Black communities and generate economic opportunities. So, as the power of all this information is that it's information. It does you nothing if you don't act on it. So the reality is that the time is now for you to either get involved in the market, especially as a person of color, to change your socioeconomic situation so that you're putting not only yourself, but your family in a place for the better. If you're a renter and you haven't even made the decision, you haven't been thinking about it, and you just came across my channel because you are on YouTube, then one of the things you might want to begin to think consciously about is, do you have a plan in place? What does the next 5 or 6 years look like for you? And if you plan on being in the same place, in the same city, think about maybe not being a renter. Think about putting yourself in a situation where you are paying yourself. And the last thing I'll say, I finished a closing yesterday with a client. And one of the things, as I talked to you all about this, about ABCs, which is always be closing, you should always be learning as well. And one of the things I realized in the transaction, in the closing, was that the client signed a W-9. And that is how the IRS tracks all the interest and growth as it relates to your property. And you only receive a W-9 when you are self-employed. You receive a W-9 when you are owner, when you own something. And that underscores what your house is. Your house, even by federal government standards, the IRS, it is something that you own. It is essentially a business. It's an asset. And that's the power of this asset. And we see historically it's resulted in the creation of policies that kept people from being able to access it. So much like the power of voting, exercise your power and your right to own something and then sell that something and then own something else. My name is Brandon. I'm your trusted realtor. Make sure you like, subscribe, and stay tuned in and in tune to the latest and greatest realty here in the DMV and everywhere else. Take care, and I'll talk to you soon.